Hey, how you doing? This is Jack. This is going to be my bar-by-bar review of the S&P 500 futures contract for Thursday, December 26, 2024. So today is the day after Christmas and the market was closed yesterday, but the day before was a half day. And on that half day, we have a tight bull channel with a midday trading range and a late bull breakout. So we ended the day always in long. We were still always in long from the start to finish of the day. But we had a strong bear breakout on 29 here. We tried to flip the market to short, but the bulls quickly reversed it up. Today, the first part of the day is gapping down. It's a medium-sized gap, maybe a small-sized gap. So it will probably close if we're still always in long. And the gap down is being rejected. We have a bull bar with a prominent tail here, and that tells me that we're probably going to go higher. But as with any open, 50-50 chance we rally or sell off, and whatever the first direction we get is 50-50% chance that it will be the wrong direction and we'll go the opposite direction. So bar one, probably still always in long and going higher, but better to wait. And then bar two, we have a bear inside bar and a doji bar. So we're forming a tight trading range here. We have a lower high and a higher low, and that means we have a triangle on a smaller time frame. And we're testing down in the middle of this triangle, this trading range. Any trading range with three pushes is a triangle, even if it doesn't have a triangular shape. So we have a tight trading range here in the middle of another trading range. It's the open of the day, but there's probably sellers above, buyers below. And we're holding support at this low close on 37. And we're making a higher low from the pivot point around 29 and 30. So probably buyers below and sellers above. Bar three, another inside bar. We made another lower high and a higher low, but a much lower high than the higher low is high. And we have another doji bar, so it's breakout mode. And I suspect whatever breakout we get is initially going to be the wrong direction, unless we get a surprisingly strong move with a good close. We broke out to the upside on 4 and reversed down, forming a bear reversal bar, where we have a very small body and a little tail on the bottom. I suspect that this is going to turn into a good sell signal for the bears, at least for a scalp, maybe for at least half of the range of the bar. Not sure why this drew so far above and why it's having so much trouble. Lock it, load it, good. So if you're a bear, reasonable stop entry short with a stop up here, looking for at least half of your risk, maybe 1 times your risk down here. I think that's pretty reasonable. For a few reasons. We are probably always in long. Even if we break out to the downside, still always in long unless we get breakout and follow through, a really strong close, a really good bar. I think we will break out to the downside because we have consecutive lower highs. We do have higher lows as well. But we have 3 bars that are fairly bearish and only 1 bull bar. And it looks like we're testing the moving average and selling off each time we do. So for that reason, I am bearish, but I think the overall context is always in long. Big, huge bear breakout bar on 5. Weak close, we have a prominent tail, and this bar is clearly a climactic bar. What is it testing? If I had to guess, it's probably testing this failed stop entry for the bears. Either the breakout below 10 that reversed up on 11, or the sell to close bar that immediately failed on bar 8. And it looks like the tail is testing that exact price level and reversing up. So I suspect buyers down here. It may be always in short, but this could be a leg 1 pause, leg 2 move in an overall trading range. We have a buy climax that evolved into a channel here, and now it's evolved into at least a trading range. And the bears want this to evolve into a bear trend. But bear trends need follow through, and this does not look like a strong enough bar to make me think that we're going to have a strong bear trend after it. For that reason, traders saw the support level, saw that it was probably roughly a pullback, a 50% pullback in this rally, and bought the close of 5. We also have that prominent tail, so that means the reversal started as 5 was closing and continued through 6. And 6 is breaking out and closing above bar 5 It's also closing above a couple of other closes here from the tight trading range in the triangle breakout. A lot of times what you get with a triangle is a breakout that fails, reverses, and tests back to the midpoint of the triangle, which is what's happening here, I think. We're testing the midpoint of this overall tight range, which is also a triangle, and that's to be expected with any triangle breakout. But because 5 has a prominent tail, I think we're probably always in long on the open. It made sense to get this sell-off. This reversal up is strong enough for a second leg down, just like the sell-off down is strong enough for a second leg down. But this could simply just be an opening reversal where the first direction of the day is the wrong direction, and then it reverses up, creating a low of the day early in the day. So bar 6, good breakout. We tested the moving average, sold off a little bit. I suspect we're going to go higher. We may need to pull back first. Both of these bars are climactic. It's a 2-bar reversal. I think higher time frame, always in long, but overall trading range. So I expect disappointment, and therefore better to probably buy a pullback instead of buying the close of 6 with a stop down here. I suspect we'll go higher. The bears do need a second leg down from 4 and 5, but if we are in a trading range, and this is leg 2, the bears may not need that much of a second leg, or we could get that second leg after we break out above the high of the day, or above the triangle, or above any of these bars. A delayed second leg is a common feature in trading ranges. Good follow through for the bulls, but smaller bar and breaking out barely above the prior bar and the moving average, and failing to close above the swing high on 4. For that reason, we may find a pullback here. We may find sellers up here. I suspect we're always in long and going higher, but we need more follow through, and I suspect we need a pullback to make this a sustainable rally, because 6 is climactic, as was 5, and 5 failed on the following bar, and 6 looks like it may fail after this bar, which is why we went outside down on 8. Big bear breakout, but the problem is it's an outside bar in an overall trading range. Also, if you look at the breakout on 5 as a possible breakout of 1, or this triangle, we broke below it and failed and reversed back up. Now we're trying to break below that level again, and we need to get follow through. But the way I kind of look at it is we have a support level here that was broken, and we got back above it, and now we're back at that level testing it. So to me, it's like the trading range is up here. We had a brief breakout that quickly failed, a big reversal down and reversal up, and now we're back above the trading range. That's kind of how I look at failed trading range breakouts. But I think 7 is a really good start to a second leg down from 4 and 5, so it's a reasonable bar to look to get short with. The only problem is 6 and 7 is breakout follow through, reversal follow through. Technically, it's a 3-bar micro channel, but no gap. And it's a really strong reversal up from 5. There's more time and price control with 6 and 7 than there was, in my opinion, with 4 and 5. Because 4 is a smaller, weaker bar, and both 6 and 7 are strong bars. So therefore, I think the bulls are stronger than the bears overall. And the bears want this to be a second leg down from 4 and 5. But if you're a bear and you get this against your position, you've got to be thinking that we're going higher. So therefore, this may be more of a buy the close bar than a sell the close bar. So there may be buyers at the close or below the bar. We may go lower, but I think it's really risky to sell the close or even look to sell a pullback because of the strength on 6 and 7. Inside bar 9, probably going higher, but second leg down from 7. Weak bar, prominent tail. Low close is above the low of 8, so we don't have a clear breakout. The bears need one more bar to convince the market that we may be losing control from long to short. But reasonable to think of the market still as always in long. We're starting to accumulate more selling pressure, and the bulls need to do more to convince the market that we're still always in long and going higher. But if you're a bear and you sold during 8, maybe you sold to pull back on 9, 10 is not the follow through that you wanted. Therefore, it's disappointing, and for that reason, it may fail, or we may pull back before we go lower. But this tail here tells you that traders got a new low and got out. at a minimum. But still reasonable. We could still go lower. I just think it's a bad sell at close bar and a bad stop entry short bar. It is a 3-bar micro channel, but it's not a very good micro channel. Traders bought the close of 10. We reversed up strong on 11. We have a big bull bar closing on its high, breaking above the moving average, and trying to get a second leg up from the rally on 6 and 7. The problem with 11 is we're still inside of the overall trading range, so we don't have a clear breakout yet, even though 11 is quite strong. Rather than buy the close of the bar, it would maybe be a better idea to look to buy at support, maybe the 9 high or the 10 high, or any pullback that you get into this bar for another leg up. Maybe a somewhat symmetrical leg to 6 and 7. But we're still in a trading range. We're trying to channel lower. We could have a really ugly expanding triangle happening here. Maybe something like this with a failed breakout. Or maybe something that looks a little bit more ridiculous. But in any case, we're in a trading range. We're trying to go higher. I suspect disappointment after this bar. Therefore, it may be better to buy a pullback. But the bulls didn't get much of a pullback yet. 12 pulled back into maybe 30% zone, into the 30% zone of bar 11 and rallied. We're closing above. So we have a reversal and breakout and follow through inside of a 3-bar micro channel with a small gap open. And that's bullish. That's good. That means on a smaller time frame, we're forming some sort of spike in channel pattern, or we're forming a strong enough reversal for maybe a second leg up on this time frame. But this already is a second leg up from the rally on 6 and 7, so you got to be cautious if you're buying up here. I think 12's body is so small and disappointing after a body like 11 that whatever rally we get, it better be strong and it better move quickly to close above bar 8. Otherwise, bears are going to start selling and bulls that are long are going to become disappointed and look to take profits. So therefore, everybody's going to start selling if we don't start to get some better follow through here. Small bar on 13 with a prominent tail, testing the high close and losing momentum, losing acceleration. Therefore, we may find profit taking and sellers up here. 4 consecutive bars up since 10. I suspect we're always in long and going higher, but it looks like we may need to pull back. Maybe we'll get a deeper leg or a deeper correction, more symmetrical and proportional to 4 and 5 if we start to sell off on 13. But instead, we have a doji bar. It's a near outside bar on 14, and we're testing the moving average and finding buyers, and that's bullish. So this is not the entry bar that bears want to see for the stop entry short. I suspect we're going to find more buyers down here, but they may not come in until support, like I mentioned before, either the inside bar high on 9 or the bad buy signal bar high on 10, or possibly somewhere in the buy zone of 11 or the 11 low, or the low close on 10. Somewhere in there, we'll probably find buyers. I suspect we're in a trading range. I suspect we're always in long. I suspect we're going higher. But I suspect disappointment. 15, traders sold to close of 14. This could be a give-up bar. The only problem is the prominent tail here. We broke out a little bit below the bad buy signal bar high and found buyers. We also have a round number, 60-80, where we found buyers, so we may find more hesitation here and go more sideways. Because of the prominent tails on 14-15, this could be leg 1, pullback leg 2 on a smaller time frame. But it's really not enough information to make that guess yet. So I think the bears still need 1 more bar, maybe 2 more bars, and we need to get a close below the swing low to convince me that we're going to go much lower. Overall, I think it's confusing and therefore a trading range. So probably buyers below. Instead, buyers at the close. Traders bought the close of 15, and now we're breaking out above that bar and closing above that bar. We have a smaller bar that looks like somewhat of a duplicate of 11. The problem for the bulls is the breakout bars are getting smaller. 6 is quite large, 11 smaller, noticeably, and now 16 smaller than 11. So that's a warning that maybe the bulls are not as strong as they appear. We also have 3 legs up. 1, pullback 2, pullback 3. We have higher lows, so in terms of spike breaks, we're in leg 3 near the top of a trading range, and that is not an ideal place to be buying. But it is a breakout bar and it is strong, so I suspect it's going to get a second leg and go higher. But I suspect disappointment because we're in a trading range, and I suspect some sort of pullback. Good follow through for the bulls, but tail testing high of the day and failing to close above the swing high, but good for the bulls. It's a bull bar. It's good follow through at a minimum, though it's leg 3 and we have a bar closing at the midpoint. And that's not ideal, especially late in a micro channel. This is bar 3 of this micro channel. So we may find profit taking and sellers up here. And I suspect if we break out below this bar, we may find more sellers. But this is a bad sell signal bar. So whatever selling we do find, I bet we'll also find buyers, probably at the 15 close or the 15 low. If you're a bear, maybe you thought 15 would be the start of the second leg down from either 8 or 5 and sold that close with a stop, maybe a measured move above. And if that's the case, we'll definitely find buyers down here if we do sell off. So I think the odds favor the bulls a little bit more than the bears, but it's confusing. So therefore, it's probably better to wait. Then we get 18. I think the game changed a little bit with 18 because the low of 18 is less than the low of 17. There's a small breakout here. For that reason, bears are trapped. If you're a bear and you see bar 17, you're thinking, okay, this is like 3 at the top of a range. Maybe it's a wedge. You could draw the wedge pretty easily like this, and it looks pretty good. The problem is this big reversal here in this wedge. So it makes sense for the bulls to get a second leg up, but it also makes sense for the bears to get a second leg down. So maybe you sell below that bar with a stop above it or a measured move above. And if you did that, you'd be trapped with 18. 18 is also the first bar closing above the swing high created by 8, and that's bullish. That means we're probably going to go higher and maybe test the high of the prior day, 45. Excuse me. So we have trapped bears, and for that reason, bar 18 to me is a buy the close bar with a stop down below or a stop below the swing low on 15. You can see the low of 18 coincides with the high of 15, which is a bad buy signal bar, which triggered on bar 16. For that reason, it became support. Any bears that are selling either the close of 15 or above 15 use this sell-off from 17 and 18 to get out of their losing position, and the market rallied for that reason. So everyone is buying. Bears are getting out of their shorts, buying, and bulls know what's going on. They're buying. Bar 18 is resetting the market cycle, or at least trying to. It's a somewhat small bar comparatively to the other bars of the day, so it needs to get follow through to convince us that it's going to test the high of the prior day. But I suspect we will get some follow through. We have a deep pullback into 18 and then a rally and good follow through. We have a close above 18, and this is a pretty strong bar. So this is breakout and follow through above a swing high, trying to reset the market cycle. The problem for the bulls is we have a lot of overlap here. And because it's coming, a lot of overlap is happening in this micro channel, that tells you that we're inside of a broader channel on a smaller time frame. And broad channels eventually become more broad and eventually become trading ranges. So for that reason, we may find sellers above the new high of the day on 19 or 20, and we may need to pull back and test the breakout points, either the 15 high, the swing high on 13, 14, or the breakout point on the high of 8. But probably always in long and going higher, it's still leg 3, or maybe it's leg 1, pause, and this is the start of leg 2, which will be more symmetrical to 5, 6, 7, and 8. In any case, I think we're going higher. Inside bar and bear bar, 20, maybe we need to pull back before we continue to rally, or maybe the breakout would begin to fail here. It looks like the bar 19, is also testing the breakout point, or tried to, on the 8 high. So probably need to pull back before we go higher. Instead, buyers at the close of 20. We have 3 consecutive bars up and an inside bar, and traders bought the close. And we have a new high of the day on 21. We have a little tail here, and we have a little bar here, and that tells me that we may be running out of momentum. So for that reason, we may need to pull back. Instead, more follow through on 22. But again, a smaller bar, and this time a shaved bar, coming late in a rally. Any bulls that are long in here may look at this bar as an excellent opportunity to take profits. Therefore, we get a sell the close bar on bar 23. Trader sold the close of 22, causing 23 to break out to the downside and close on its low. It's leg 3, so it makes sense. We're pulling back. Technically, it's leg 4. We have a spike break on 18, which is a higher low, so it's 1, 2, 3, 4. After 4 legs up, we have a little wedge. Makes sense. We need 2 bars, 10 legs down. 2 legs, 10 bars, 2 legs down, or at least a small 2-legged rally down to the moving average to find support before we start to rally again. We have a bull breakout. We're always in long. The bears want to convert the market to always in short with this strong breakout bar, surprising the bulls. Anytime you get a strong surprise, it's likely to get a second leg. So technically, the market is temporarily always in short by context for that reason. But the bears need follow through. And it's a doji bull bar and a bull reversal bar. We broke far below 22 low, so I suspect we're going to get a second leg down. And I think this reversal up on 24 could be the start of that pullback that gets the second leg down. So 24 may be more of a sell to close bar than a buy the close bar for that reason. There may be sellers above this bar. Instead, it's a good entry bar for the bulls. We're going higher. The problem for the bulls is we have a tail that looks like it wanted to test the high close on 22, and 24 and 25 may not be enough to convince the market that we're going higher before we get a second leg down from 23. Good follow through bar. Now we have an open gap between 24 and 26, and it looks like we're closing above the high close on 26 here. So we may be going higher. And traders bought the close of 26. We have a climactic bar on 27 testing yesterday's high, and we have a small tail up here. I suspect we're going higher. It looks like we have a breakout of a small trading range that formed here. Therefore, 27 is trying to reset the market cycle, and this may be a new leg 1, which will get a second leg up, or possibly a third leg up, but it needs follow through. Small pullback and a rally, but lots of overlap on the follow through bar. Minimal follow through, but good follow through on 28. I suspect we'll go higher. The problem for the bulls is we have yesterday's high that we're testing and trying to break above, but the test is pretty weak so far. We're not getting very far above it, and for that reason, I'm hesitant to buy up here, or suggest buying up here, that is. And for that reason, we may need to pull back before we go higher. 27 is leg 4, or leg 5 in this rally. So it's getting a little overdone. And then we have 29 breaking out to the downside, but it has a weak close, and it's coming after 5 consecutive bars up. Therefore, it's probably a buy the close bar rather than a sell the close bar, which is why we have bar 30. The problem with 30 is we have a new high of the day, but we don't have a close above that point. Instead, we have a close that is equal to the high close on 28. So we're starting to form a small tight trading range, and the bulls need closes above prior bars and above swing highs if we're going to go higher. Otherwise, we may continue to go sideways, and eventually bulls will give up and will create a downside breakout, and bears will begin shorting. We have a strong bar on 23 that got bad follow through, but this is a lot of distance covered here. Bears were able to make probably a 7-point scalp if they sold below 22 and held until the low of 24. And probably bears didn't do that. Actually, just for fun, let's see what bears would have got if they sold the close with a stop above the prior bar. If you're a bear and you sold the close of 23 with a stop above this bar, you made half of your risk, half of your initial risk. And if you took the stop entry below this bar, you were able to make at least 5 points. And that's not all that bullish. We do have open gaps. We have an open body gap between the low of 23 and the high of any of these bear bars. And we do not have an open gap between the candles, the lows of the bars and the highs of bars. This gap has been closed. We're trying to form another open gap here between the high of 23 and the low of 29, but because we're going sideways here, this gap may begin to close. This does not look like the start of a strong bull trend that's going to last all day because of the strength of the bear bars, especially now that we're going sideways up here at the high of the day. Bar 30, I suspect sellers above. Instead, we're getting a small follow-through bar, 31. We may go higher, but for the bulls, this is not really the follow-through that you want after a bear bar and then a near inside bar on 30. For that reason, I suspect we'll find sellers up here. We have a doji bar and then another rally on 33. We could be forming a small mini wedge. This would be 1, 2, 3. So we may find sellers up here. Instead, a climactic bar 34 with a prominent tail. New high of the day and a close above the prior bar. This is a good bar and it's a strong bar and it's a bigger bar than 33 and it's coming late in this rally. This rally is starting to get parabolic, so therefore eventually we're going to find more selling pressure up here. And this may be the start of it, but we have a weak close on 35 and we have buyers below 34. But good follow through for the bears, a bit of a surprise 36. For that reason, bulls that are buying lows and buying at breakout points are now trapped into a losing position. Therefore, whatever rally we start to get, I suspect we'll find hesitation and disappointment. This may be a sell to close bar, but we're in a trading range. We have a failed breakout of the high of the day yesterday, but we're right above the moving average, and we're closing at the low close here, where the bears got trapped previously, and those bears are now relieved, buying back their shorts, which will create a rally, which is why we have 37 here. We found buyers below 36, and we're rallying pretty strongly. We have a reasonable sell signal bar here on 35, but technically the sell triggered on 34 and 35. And 34 is a very bad sell signal bar. For that reason, we formed a buy vacuum test of that resistance level, so we may find sellers above this bar, and that's why we have 38. 38 is breaking out to the downside. It's a second leg down from the reversal and follow through 35, 36, and again testing the moving average and reversing up just into the close of the bar. We also have the low close on 36, which is being tested and holding as support so far. I think 38 is probably strong enough for a second bar down, so I suspect we'll go below the low of 38, but we may not. The bulls may be strong enough to buy the close of this bar and prevent the sell-off from running the stops that triggered on bar 37. 37 was a bull reversal bar, and that reversal triggered here with a breakout on 38, but it failed, and we have a weak entry bar for the bulls. The bulls may still hold long because we have the moving average, the low close as support here, but this sell-off and this selling pressure up here is pretty strong, and it may be strong enough to overpower the bulls. For that reason, it's confusing, and we have 39, a small little doji bar, channeling lower, testing the moving average, breaking below the low close, but finding buyers. For the bulls, quite disappointing, so we may find sellers above for a second leg down from the sell-off starting on 38. It's also getting late in the day. Well, I say late, it's really the midpoint of the day. You can't see the time yet, but it's 12:30 here, and that's usually about the time that the market starts to go sideways and form trading ranges. So I expect buyers below and sellers above in an overall trading range. Enough selling pressure that we may need to go more sideways before we go higher. Sellers at the close of 39 looks like a give-up bar for the bulls. We did not break out above 39. I suspect because we hesitated up here, all the bulls that were buying through here are taking whatever profits they have and giving up on bar 40. Bar 40 broke below the buy signal bar high on 24 and tested below that bar. It looks like it's testing the breakout point around the 13 and 14 high and finding buyers. We also have buyers below 24. We have trapped bears below 17 and 18 here, so I suspect that we'll test this level. We got pretty dang close on 40, so I suspect we'll get there and then hesitate and go more sideways. The bulls are trying to reverse the market up. We have a higher low micro double bottom on 41, but I think the channel down is too tight, therefore probably sellers above, and that's why we have 42. Weak close on 42 and prominent tail and another higher low. I suspect we're going to go higher and probably buyers below 42. If you're a bear, it's 1, 2, 3 legs down in an overall trading range day. And let's see where we are in terms of the high and low. We're right around the midpoint of the day. So I suspect probably always in long by context if we get another good bull bar after this bar. And if we get a strong bear bar after this bar, that'll make me think that we have to go a little bit lower in this trading range. Good bull bar, but prominent tail here. I suspect a pullback and then a rally, probably always in long by context, breaking above the moving average but failing to close above there. And 42 is a problem. It's a confusion bar. It's a doji trading range bar, and we're high in the range. Therefore, probably sellers up here. Instead, the sell-off failed at the close of 41. It looks like we tested the stop entry bar for the bulls here and found buyers. We're also about the midpoint of 43 finding buyers. It's 1, 2, 3 legs up, implied legs, and we're getting close to the high of 40, which was the last strong bear sell-off bar where we may find more sellers. We also have the magnet of yesterday's high just above, and we sold off from that breakout before. We may do it again. I suspect we're going to go above yesterday's high. We'll probably find sellers above 40 or maybe sellers above 37 where the buy signal triggered and failed. Instead, sellers at the close of 44 and 45 finding buyers below the bar, but strong enough bar for a second leg down. The bears see this as a tight channel down and a pullback, two-legged pullback to the moving average, and they want 45 to be the start of a bigger second leg down. But I suspect they are not going to get it because we have a lot of buying pressure down here. So probably buyers below. Instead, buyers at the close. I suspect now we're going to rally and test the bad sell signal bar low, also the trap price for the bulls on 37.38. Strong close on 46, probably always in long going higher, but it's the third implied leg up and the second spike break leg up, and we're closing above bar 40. And I mentioned before that we may find sellers up here because that's a really strong bear breakout bar. Despite the weak close, we covered a lot of distance, and it's a really surprising bar, surprisingly big bar. So I suspect sellers up here, maybe even sellers at the close, and that's why we got 47 here. But 47 is a weak bar. It has a weak close and a prominent tail testing the moving average and reversing up. For that reason, probably buyers below and probably just a pullback and a second leg up here from 46. 48, really disappointing for the bulls, breaking out to the upside on 47, finding sellers at the high close of 46 and reversing down below the high of the day. But 48 is also a problem for the bears. The bears have had several opportunities to create a bear trend here, and they're failing every time they do. So I suspect buyers below this bar, actually. It's the third implied leg up, maybe even the fourth here, and we have a micro double top. So theoretically, the short will trigger below 48, and the bears want, at a minimum, a test of the 40 low, a breakout of that, and a measured move down. Lower high major trend reversal. We have a strong rally on 6 and 7, then a bull trend that lasted a good amount of bars, trend line break, and then a lower high testing this high. Looks like it could be failing. We may need to go a little bit higher for the major trend reversal to trigger, but this is a reasonable entry for the bears. I suspect it's going to be disappointing because overall today has a lot of trading range price action. And if you just look at the day as a whole, it's a trading range day. There is a bull trend here, a bear trend here, a strong sell-off here, a strong reversal here. I suspect we're going to go more sideways to down. So sellers at the close of 48, we have a big bear breakout bar. Closing below the low close on 45, probably going lower. It's second leg down from this tight channel, so I suspect a pullback and another bar down. Strong enough bar, reasonable to sell the close, but I suspect disappointment. We also have the swing low, which is support, where we found buyers before, and we have buyers probably below 46, which is why we have bar 50. Bar 50 is a signal that the bulls may have used the rally here to get out of whatever positions they built, buying below 47 and 48. But we have a pretty strong close here. Bar 50, even though it's closing at the midpoint, the body of the bar is about the same size as the body of these bull bars. So that's a sign of strength. And it could be that this is making a higher low. It could be that this bar is trying to make a double bottom bull flag with 45 and a higher low from the rally starting on 40. But it's an overall tight trading range, and the bears still need a second leg down from the sell-off, I think. But it looks like the bulls aren't going down without a fight, so I suspect whatever breakout to the downside we get to find buyers in the buy zone, probably somewhere around here. Second leg down for the bears, weak close, and that tells you probably buyers at the close or below this bar. It's a trading range day. We broke out far enough below the low close. I suspect a little bit more down, but I also suspect disappointment. For that reason, we have 52. Buyers at the close of 51. This should be enough information by now, certainly, to tell you that today is not going to be any kind of a trend day, and it's a trading range day. Therefore, you have to think in terms of a trading range. Right now, we're in the middle of a small trading range, and we're in the bottom half of a larger trading range, which looks like something like this. We're right around the middle. It's not ideal to do anything here, but if anything, I'd be interested in buying, and I'd be interested in buying low, like if we get another bear bar or a pullback. For that reason, we have a pullback and a rally on 53. I suspect we'll go higher, but it's an inside bar. There may be sellers up here, especially sellers at the high close or sellers at the failed stop entry right here that triggered on 47.48 and failed immediately. Sellers above 53, but tail 54, probably buyers below. Second leg down from 54, third leg down from 54, breaking below 51. We may go lower. It's second leg down from this tight channel, but overall, really sloppy trading range price action here. I suspect disappointment. Sellers above 57, good sell signal bar. 4 consecutive bars down. I suspect we'll go lower, but then again, trading range day, we're right near the low of the range. Channeling lower, now 5 consecutive bars down, but buyers at the close of 58, reversing up on 59. 59, probably short covering and sellers at the close or sellers above, which is why we got 60. But this may be a sign that we're at the bottom of the range and we're starting to find buying pressure. Outside bar, so tight trading range, breakout mode, probably buyers below, sellers above. That's why we have 62. Bears are trapped, 61, 62, but high of the range, probably sellers up here, instead buyers. Bit of a surprise, probably needs a second leg up, but we're testing the high close on 53. Prominent tail, we may get to the high close, we may get to the high of the prior day. We also have trap prices up here. I'm going to go ahead and get rid of these prices. We have the high close, which is a magnet, and the trap prices. We're probably going higher, but we may need to pull back. Losing momentum for the bulls, but probably always in long by now. We have 3 consecutive bars up with a micro gap. It's 2 legs up in an overall trading range. I suspect we're going higher. 4 bars up, probably going higher. And now 5 bars up at resistance, where we have failed once, twice, and probably a third time. So I would be more interested in selling up here than buying. And getting late in the day, this is about 3 o'clock, so probably not much to do after a few more bars. Going higher, getting a little climactic, probably sellers somewhere up here, more climactic, and then finally sellers on 69. Trap bulls buying below any of these bars. Hopefully they're not dumb enough to do that, but still reasonable to look to sell for a second leg down. Bad follow through 70, but probably going a little bit lower. Instead, bull surprise, reversal, and follow through. Probably sellers above 72. Small bar, maybe buyers below 73. Testing the EMA and low close 69. Traders probably sold this close with a stop up here. Saw this disappointing rally, getting out at this low close price level. Therefore, we're channeling higher 74, 75, 76. Channeling a little bit lower, 1, 2, pullback, need a third leg up. Instead, we're getting a surprise bear breakout, and then sideways to down into the close. You know, kind of a tricky day, man. Look at the middle of the day. This is really, I don't want to disrespect the market, but this is garbage price action. This is really tough to read. And you know what? Let's just do something for fun. Let's look starting at the sell-off until about the rally here. Let's look at this on a smaller time frame, like the 1 minute chart, just for fun. I want to see what this looks like, because I'm sure it's much more clear on the 1 minute. So 1 minute chart, this is the high of the rally, and we're starting to sell off here. So we have a spike pullback channel, 1, 2, 3, climactic third leg, micro double bottom, reversal up, but this reversal is the midpoint of the sell-off here. Strong outside down bar, but bad follow through, doji bar, and then a strong bar, strong sell signal bar, 189. If you're a bear and you're flat and you see 189, it could be a sell vacuum test of support, the bad buy signal bar here, but we're starting to go sideways. 1, pullback, 2, pullback, 3, and then another strong bar, second leg down from the sell-off. It's a little bit more readable is the point I'm trying to make. You know, it looks really shitty on the 5-minute chart, really hard to read, but this is a 2-legged move down, a small triangle that got a bear breakout. Then a double bottom here, strong reversal up. Look at this micro channel. Gap here, gap here, gap here. Deep pullback, yes, from the bottom of the micro channel. Probably 80% of that micro channel was reversed. But then this reversal and follow through here was met with a really strong bull reversal bar that got good follow through. And then we began channeling higher and higher. Finally, the bears are giving up here on 213. We have a strong bull breakout with follow through here, but we're not above the swing high, so it makes sense that we pulled back inside of this micro channel before we rallied again. So we formed a bull channel. Yeah, look at that. Copy and paste. Maybe something like this. Then after we had that bull channel, we went sideways, got a bear breakout, couple bear legs down, little bear channel action here. Anyway, yeah, really tough to read on the 5-minute chart, a little bit more clear on the 1 minute. Let's look at the 3-minute, maybe something in the middle here. All right. Yeah, so a little chaotic, a little climactic here. It makes sense we had a 3-legged rally here. Wedge channel. That's what this is. It's a wedge. 1, pullback, 2, pullback, 3. Testing above the strong sell signal bar here. And that led to a wedge bottom, a double bottom, a tight trading range, and eventually a strong bull breakout. Now let's look at that on the 5-minute chart. So the 5-minute chart, everything is implied. 1, pause, 2, pause, 3. Micro double top, strong bear breakout, second leg down, but bad follow through. 1, pullback, 2 legs up, micro double top, bear breakout, channeling lower, parabolic wedge bottom, micro double bottom, strong bull breakout, sideways, major trend reversal, bear trend, trend line break, higher low, bull breakout, and then a tight channel up. So anyway, just interesting, just good practice to think about the market like that. Anywho, that's my read. I appreciate you watching. Bye.